Hey, how's everybody doing? I'm Dominic Cousins. This is Matt Breitenbach of the Breitenbach Advisory Team here with Johnny Vlogianitis of Citizens Bank, the lead sales manager there. How you doing?
Yes, everything's great, man. Thanks for having me. Appreciate it.
Thanks for being here.
Great
We're here with Bat Disrupt, and we're so excited to have our man, who many know in the industry as Johnny V.
Yes.
And thank you for being here
Good
with
to
us.
be here.
It's exciting.
Yeah, I love having you here, Johnny. You're great. You're a great partner of our team, and we're excited to be on Disrupt again for our fourth episode.
Boom.
Yeah, and here we are. So, and you're quite the disruptor. I've always admired your business and what you've done. And
Appreciate that.
Dom's got a few questions. Why don't you let it rip?
Yeah, so we're talking about disruption across the business of real estate, and obviously you got your hands in a lot of it in many regions, which is awesome. So first, we'd love to get a little bit of background on yourself. So I know you were a basketball player, which is near and dear to my heart, and played. Didn't you play professionally overseas?
I did. I played overseas in Greece. I was also, what a lot of people don't know about me, I was a Washington General. So for those who don't know the Washington Generals, I lost the Harlem Globetrotters every night. Real stuff, and yes, it's fixed, but I was a Washington General. If you see The Simpsons, you bet the Generals. So, but so then did a little bit of stint with the Generals, played overseas in Greece professionally, and then I got into mortgages when I was around 27, 28-ish, right around 2000, and the rates were what they are about now. So about like 7.5%.
So that's right before 9/11.
Right before 9/11.
So so big, obviously, change across the world.
Yes.
And so before we get into what you're truly seeing in your space, maybe in the lending side, obviously everyone's talking about rates being high. Can you help help put that into perspective for just the normal person out there who just reads a headline is like, oh, the rates are so high, like
no, that's a good point. So a lot of people don't realize that, like, if you're going to borrow below $647,000 or less, that's a Fannie Mae one family conforming limit today. Those rates today are about like 6.5, 6.6 around there. If you're borrowing above $647,000, it's considered technically it could be a jumbo mortgage. Those rates are actually a full point less, if not less, so about 5.2, 5.375. So the media kind of blows out of proportion, if you will. But yes, the rates have jumped up and like fast. So I think it was, with the Feds, it was a little bit too much too soon. It's tough when you're talking to customers in the pipeline that were pre-approved at like 4.5, and then a month later you're quoting them maybe like 5.5, 6%. I'd steer a lot of customers away, and they got nervous with the monthly payments going up.
Got it.
Yeah.
All right. Well, obviously, high interest rates impacts everybody. That's a major disruptor. But without that obvious one, what else, I guess, would you see in your space as a big disruptor that's happening right now?
Right now, I think a lot of these banks or brokers will try and come out with maybe a bank statement program, if you will. A lot of people don't realize we have a lot of customers out there who are self-employed and don't show that much income. So one of the things we struggle with is when someone has a very successful business, maybe has a lot of money, and obviously they have a bunch of real estate, but they don't show income. So some of these brokers or banks will come out with what they call a bank statement, where you just show bank statements, money getting deposited to the account monthly. Sometimes we'll compete against that. Obviously, that's going to be a higher rate. And in the secondary market, not too many investors are interested in purchasing those loans, but it is something that we'll compete against sometimes when you have a self-employed customer who doesn't show that much income. So a little bit of that in that space sometimes.
Okay. Well, all right. That's definitely impactful.
Crypto really hasn't hit, I'm not going against anybody who's like, well, I just bought a house with crypto. I mean, it's a very rare, far and few right now in that, especially with people still a little bit skeptical, let's be honest, with crypto. And, I'm not going to get into why or why not, but it's still just very it's not, and a lot of banks stay away from it. Even if someone has a bunch of crypto assets and they want to use, the bank will ask them to liquidate it, so.
Got it. Yeah. What's your most active market right now, would you say?
The question right now is definitely in New York City right now. Very active, for example, September, if I closed 18 loans, maybe 8 or 9 were from New York City. The rest, 3 in the Hamptons, a construction loan, Long Island, and so forth. But for me right now, Manhattan, obviously more volume, but Manhattan's definitely busier.
One thing I want to touch on, and Matt, maybe you could speak to this more. You guys were talking about it offline, and you were talking about Johnny being, who he is, great guy, obviously, but also the unique figure of why he's good at what he does.
Yeah, I won't embarrass Johnny too much, but I think when I first met you, you came to the office. I was at an older brokerage, and you came out to the Hamptons. It was a little bit more casual, and you had a full suit on. I was like, who is this guy? And I think you were, the reason I wanted you on Disrupt, and we love bringing like kind of people like yourself or people that are really pushing their industry in different ways on Disrupt and really digging deep and just trying to grow and scale their businesses at a deeper level. And I think for you, I always admired you because I thought you prospected and like got leads as a mortgage broker, but like kind of what agents do.
Yeah.
Like I would go into the city a lot in my career, especially earlier on, go meet with agents, go get face to face. Like you were very relationship driven. You wanted to get face to face. You know, but I never saw a mortgage broker do that. I saw a mortgage broker maybe host a lunch or host something, but like you would host these big dinners and you invite everybody out and you're so generous.
Yeah.
And you just really focus on that relationship. So maybe speak to that. Like, where did the idea come from? Like, how did that all come about?
So I was at Wells Fargo 14 years, and I love Wells Fargo. They're great, and I still have friends who work there. I just made a change to Citizens Bank, and at that time we had a relationship with a real estate company. So they said, listen, if you want, you know, I was more focusing on a city in Long Island. They said the Hamptons is wide open. So I was like, all right, why don't I just go out
market.
there? Amazing market. At that time, this is probably like 7 years ago, so it wasn't like booming. It was like, you know, there was a lot of inventory out there. It was a little bit different times. I met Matt, and then Matt was great, so thank you again. Always looking to introduce me to different people. But
sure.
Especially to speak to the Hamptons. Hamptons is a place where you're just not coming like dropping a card off once every 6 months. It's not going to work. So the whole thing is like, you know, a lot of people are like, oh, Johnny V's in the Hamptons. I'm like, the Hamptons is wide open. I don't own the Hamptons, but are you going to drive out there like once a week and be consistent and show up and then stop off at 7, 8 offices, whether it sounds cheesy, but dropping off gas bladders and you know, hosting dinners. And
I've been looking at your calendar for like a couple of years. Like your calendar.
Like it's all like, we're all one connection away, right? You never know who you're going to meet on that special day. And then, you know, it could be frustrating. You walk into an office and maybe no one's there. And then you go to the next office. And it's not like New York City where it's bang, bang. It's like, you know, okay, I'm in Bridgehampton, but now I got to go to Sag Harbor. It's another 20 minutes. And then let me go to East Hampton, another 20 minutes, you know. So it's a lot of like, you know, you're in the car thinking like, is it worth it? Is it worth it? But if you're consistent and you stay active, it just works. And then like, it's like I always tell people, I don't get like, you know, all my deals from one person. It's like, it's Matt, it's Dom, it's Greg, it's whomever, you know. So that's about like trying to touch as many people as you can. And that's why I love we do our dinners, because it's also bringing brokers together and just networking and connecting everyone, you know. Yeah,
you've kind of built a community of people that work with you, which I think is kind of a disruption idea I see a lot and hear about too. I know for us too, it's like we talk about trying to build a community of clients and people that work with us. You know,
I know there's like, you know, some people are like, oh, you got to work smarter, but at the end of the day, like, you know, no one else is going to do this. I know that for a fact, you know, so I know, again, the whole technology thing, but like at the end of the day, the hard work is going to pay off. And then, you know, it's not like it's like 5 days a week, but if you're consistent doing it 1, 2 days a week and you stay in touch with everyone, and, you know, social media for me is like when you're doing Instagram and Facebook and your stories, it's a way to stay in front of people, like subconsciously, just like putting stuff out there with rates and whatever it is. I'm here today, but I think still face to face is the best way.
Let's speak to that a little bit too, because me and you shot a video and we love having you on this, but you've also gotten to like video, and I've never seen mortgage, like again, like very kind of like a real estate agent almost in a way, the way you kind of promote yourself.
I think we're all like trying to build our brand, right? Especially now, so we see it more and more, but I think it's very important just to let people kind of know who you are and, you know, how you go about your business. And it's all about like, you know, I mean, what does it say? We're like, you know, it takes a lifetime to build it, but 1 minute to lose it, you know. So it's like with reputation, you know, to speak to. So I think it's important to let people know that like how you go about your business every day. So,
I mean, is that how you think you pivot your site? Because there is, like, as you mentioned, there's like tech in the space, right? There's stuff in there, tech's disrupting everything, all sorts of different ways, like our business as well. You know, Compass is kind of a hybrid, which I think is a cool model. And like, you know, how are you, like, I guess it seems like you're combating it with the relationship, with building your brand. I mean, speak to that a little bit. How you combating some of this like disruption in the space from other like bigger, larger companies, Rocket, you know, all these Rocket Mortgage or whatever and stuff like that.
No, it's a great question. But like, you know, when I walked in there today, me and you were chatting upstairs, and you said like there's plenty of business to go around, right? So like, you know, maybe Rocket specializes in like one thing, or like, you know, this bank specializes in bank statements, or whatever. But I'm not going to chase that, you know. So like, I know for a fact that like we're great with like jumbo products and doing maybe 90% financing, construction and perm products, you know. So I know that, okay, you know what, where am I going to go? I'm not going to go to this town, but well, let me go to Hamptons. I think I can really capture a lot of business there. So to your question, it's great, but I think people sometimes focus on the wrong business, and you should really like, instead of trying to tap into like, you know, everyone wants to create a big net, you know, try and like create that funnel, but you still gotta be smart about it, you know. So I want to know where I can, you know, target certain areas and show up, you know, and be visual. So, but I know where my special product niche is, and that's where I focus on. You know?
Well, that's a good segue into one of our questions, you know, that we love to ask guests is, you know, pop up out of bed 1 o'clock at night, 1 o'clock in the morning rather. You may be a sound sleeper, so that's great.
No.
But pop up and a lot of things are on your mind. as it relates to your core business or something, is there something that pops in your mind at 1 o'clock at night that keeps you up, especially maybe it's now in the environment that we're in with rates? Is it?
Yeah, I mean, is Powell going to raise the rates today? I mean, of course, that's the number one. But no, there's not really one thing that like keeps me up at night. Obviously, we all have those pipelines and sometimes those tough loans that keep you up. But for the most part, I have a great team. Like I have 3 assistants, and they're amazing. Been with me for like 8 years, so I think it's a good sign that like you also
awesome.
surround yourself with good people, and that's a sign of who you are too. If you can keep consistency within your team and not like people like it's important. Like you're only as good as your people you surround yourself with.
Yeah.
So, but no, for the most part, like I'm pretty good.
Nice, good. Well, that's a good answer.
I mean, I guess for my question for you, and I guess it's more like a standard question, but like, what's going to happen? Like, what's the future of the mortgage? Like what's going on with rates? Also, like, what's the future of the industry? What do you see?
Honestly, man, like, I mean, like, I remember when I was 10 years ago, someone's like, oh, you guys won't be around much longer. There's going to be like robots.
Yeah, we've heard the same thing.
I'm like, good luck with that. Especially, obviously, where we live. I'm not, talking about any other state, but like, especially in New York. I mean, it's an attorney state, so you got so many attorneys involved, title companies. I mean, it's be impossible for someone to buy a house and not want to actually work with a certain contact or somebody. So I never worry about that. I mean, and we've gone through all these companies that come in and say, oh my God, everything's streamlined and this and that. And if you're talking about like up to certain loan sizes, maybe you can get away with like being a little bit quicker on the close with regards to like a Fannie Mae loan, where sometimes you get like what they call like a appraisal waiver and that kind of stuff. But in our markets, especially, like I don't think we'll ever go away. That's my honest opinion.
Right.
And again, like I mean, obviously, like make sure you're doing the right things. And
What's in the pipeline? That's somebody threw this out the other day. I was not that familiar with it. A 40-year loan? A 40-year loan? That seems pretty wild. And then also,
yeah.
We were at another guest on, and she brought up a great point, Holly Meyer Lucas. We talk about it too, is some millennial buyers, a big audience, big buyer pool. They got 30 years, 30-year loan. What now am I going to do in 30 years?
I always stress to people that like, even I'm talking about now, is that like for the most part, like again, I do mostly jumbo stuff, so I'm speaking to my markets, but which is above that 650-ish mark.
Right.
Especially millennials, and for the most part, people either do like a 30-year or like a 10-year ARM interest only. So again, statistically, you're going to do something with your home in 70 years. I know it sounds old, but it's the truth. Refinance, relocate, who's going there, who's doing this. So most buyers in today's world will do like a 10-year ARM interest only, especially if it gets to be a jumbo product, meaning that the rate's fixed for 10 years. It gives you flexibility to make just the interest only payments. Again, like, the 30-year fix, the first 4 or 5 years, a lot of it's going to interest anyway. You're not paying that much principal. So on the ARM interest only, you can pay as much principal as you want and the payment drops. So again, I'm speaking to the jumbo market.
Right. So, but nationally, the typical mortgage is a 30-year mortgage.
Typical would be
Right.
30-year fixed.
Yeah.
Correct. And that's what's affecting a lot of people, where like their payment could be maybe another $1,000, $1,200 a month, which is a lot of money. So, those people will be on the fence, and but moving forward, like it's talked about the 40-year mortgage. It's talked about also 0% down. They're testing in some markets.
All right. How's that? How can they test it in some markets and not others? And then after the 08 crash, how can we sort of get away from that?
We got away from it. Don't forget, the biggest difference from now and 08 is that like 08, you weren't really verifying income. It was just really like everything was streamlined. You had a laptop and you just enter all the information per the borrower, and I make this much money, I have this much in the bank, and then you just ran it through, it came back like straight to close. It's just like appraisal and contract, that's it. Now, obviously you're verifying tax returns, bank statements, W-2, so it is a totally different market. That's why I don't see any crash coming and so forth. I mean, obviously you could see a drop in prices somewhat just because inventory is picking up, but I saw a stat the other day that said like in 2040, the average house could be like $1 million, so, not to like promote it, but I think if you're not looking to buy a house in the next 3-6 months, you're being silly, because it's only going to keep getting higher and higher with the values going up. And then I worry about my kids. Will my kids be able to buy a home? I don't know. So, I think it's still a great time to buy right now. Prices are only going to go up.
I think it seems like, because people are so used to the lower rate, right?
Yeah.
That, when you come and take that jump, I was on a mastermind call with a couple top agents around the country yesterday. We were talking about, as soon as these buyers, I think, adjust to the rate a little bit,
yeah.
You might see some stuff change up. But, since we're like a Hamptons-based team, one thing that just came to me I wanted to ask you was like, what do you see the most success in the Hamptons for a Hamptons buyer? If we have Hamptons people watching, like, what do you feel like from people you've worked with recently over the last 3-6 months? Like, what's something where you heard, people you've done a mortgage for say, "Oh, that's great. Are really excited about whatever what kind of loan?"
So no, it's a very, very good question. I have I'm doing a deal right now where the purchase price is 2.3 million, and we're doing 10% down, and we're doing interest only in the whole thing. So it sounds crazy, but this customer could buy a house for 2.3 million, put down 10%, and have a really low payment. Now it's a second home, so that buyer at any time, as long as you live in the property for 60 days, then you can still rent it out. Like if you want to rent it out in the summertime, rent it out. You know, obviously you're buying a second home, but people go away or people wind up getting relocated, you're allowed to rent it out. So in the Hamptons, right, a lot of people, it's a great market to buy the property and use it as an investment if you're not going to use it. So that customer especially was like, listen, I can't believe this deal's like amazing. Like, you know, so, and still it was like a 10-year ARM interest only. The rate was probably like in the low fives, and they were like so happy, you know. But especially people love to be in the Hamptons.
Great.
You know, it's a great
It's a good
market.
story.
I mean, and the prices are not going to fall down. And I know it sounds like cliche, but like the rates will come down eventually, whether it's 3, 4, or 5 years. I mean, already the Feds the other day were saying we may pivot. Maybe we did, you know, it was too much
Too much
soon.
too fast, right?
Maybe if they come out next month and then they say, listen, we're going to hold the rates, and then we see inflation coming down. What's going to happen? The rates will come back down, and you know, so we'll see. You know,
I think you got to invite Pal to one of your dinners.
yeah. Good point.
Question for you too, and you can tell I love you. I always love talking to you. Ideal night. It's August. You're going out in the Hamptons for dinner. Could be with some friends or with a lady friend. Where are you going to dinner, and what are you drinking? And then what are you smoking after at a cigar?
Man,
Oh, these are great.
Put you on the spot.
Good.
Yeah.
Let's go out tonight. Let's go. Let's go.
I'm calling the wife. Where's my phone?
So like honestly, me and we're going, you know, Melina, usually like
Yeah.
we love, I love SAG a lot. I've
Yeah.
gotten to love SAG a lot. But
For people who don't know that, Sag Harbor.
Sag Harbor is an amazing town.
Yeah.
It's really boomed up, and I think, I mean, everywhere is becoming a year-round a lot.
It pumps that little village. It just got such
It
a
does.
vibe, especially in the summer.
We love like Tuto is great.
Yeah.
And then we go to Tuto, the Biblique sometimes. But usually it's, you know, Tuto, and then we do a nice bottle of cab. And then I can start with a Pinot Noir. Depends on feeling. Maybe go to a cab. You know,
He knows what he's doing.
I'm into Padrones, by the way, a lot. I love Padrones.
Oh, me too, man.
It's a good smoke lately. Really,
Yeah.
really good.
And then a good workout in the morning.
A good JV Fit, like, you know, obviously, like, you know, I turn my garage into a gym, so I
love that.
Really, really good workout. I'm up early in the morning during the week for the most part. I'm done by like 6:15. So, and not because like it's just like no one's bothering me. My emails aren't going off. My text messages aren't going off. It's like Johnny V time just to be like, you know, and then so it's nice, you know.
That's a great answer. I always admire your work ethic. Always admire your motor. Like, what drives you, man? Like, what's in the soul of Johnny V? What's driving
when
you?
you're working with people in sales, people just like to work with people who look good. It sounds like me.
Yeah.
It's true. Yeah, well, would you sign up
Like-
for this 50? Would you sign up for this right now? Would you sign up for this at 50?
Yes.
Tom, you would, right?
Yes, I would, I would.
That's the question right
Totally.
there.
But like,
Zach,
looking
you would
great.
probably sign up for a 50, wouldn't you?
Yeah.
Looking
But
great.
what's making you? What's why do you work so hard?
I don't know. I just like have a passion to be so successful. I just love being number one. Like I said, I've been number one guy for the last 7 years. I know it sounds,
Yeah.
but I don't care. I just love to be number one. I'm a very competitive person.
Yes.
Like I don't even like when I'm like last month I had a great month, right? Did like 23 million, and this market's really good. During the pandemic, it was like 35 million, and now 23 million is a really good month. But I'm not like because I made this much money. It's not about that. Like it's not. I know it sounds like, but it's not. It's about like, hey, you know, I'm looking at other people, like top 2, 3 other guys in the company. Where are they at? What am I going to finish at? What they put in? What did I put in? It's not about like what he's making, what I'm making. It's not about that at all. It's just about the competition. Is what I love. You know.
Yeah, that's what my wife says sometimes. She's like, I don't know if you like the money, you like the
Yeah.
you know, you like the battle, the journey, the success, like going after it. And I've noticed that in high achievers.
I'm not getting an email for like, oh, I'm buying a house $3 million right away. I'm counting dollars. That's not it. You know, I want to get this deal. Like, you know,
Yeah.
I respond like quicker than anybody. Like, you know,
Yeah.
and people like that. Listen, you're the real estate, you know, buying the house, finding the houses. I'm on the mortgage side, but it's still a big investment for these people out there making. You know, so.
Yeah, the relationships, and you seem to be, which we touched on earlier, which is your relationship. Like, you love to kind of curate that. We talk a lot about it on our team, like curating experience and getting in with people, being a different kind of broker. We're really in tune with them, and you seem to be a different
I love
kind
the
of
people in
marketer.
the Hamptons too. Like you guys are all great. Like I'm not taking you out to dinner if I don't like you. If I don't like you, like I don't talk to you. Like you know, if I don't like you, like you get that vibe. You know, so like everybody, I'm
Made
biting
the
you is
cut.
because I
Yeah.
like you. Yeah,
Yeah.
I genuinely like to hang out with you,
Yeah.
and that's why I stop by offices. I'm not worried about walking off and someone be like, "Oh, Johnny V's here." Like, you know,
Yeah.
it's just like, "Hey, what's up, guy?"
Yeah.
Like, you know, let's
Yeah.
just, you know, let's chop it
man.
up. You know,
Yeah.
So,
Well,
Great
look,
stuff.
thank you so much for being
of
here.
course.
I'm Gold Crushing. I love having you, Johnny. Love having you
man.
here. Let's
Thanks, man.
I think we should
Appreciate
take it to
wherever,
to the restaurant, maybe, and have a little beverage
Keep this
afterwards.
going, yeah.
But thank you so
Thanks,
much
thanks.
for being
Of
here
course,
with us.
thanks.
Always great
Yeah.
to see you, and we'll continue to next time.
Sounds good.
Thanks,
Thanks,
boys.
John.
Yep.
All right.
All right, boys.
That was
That was
great.
good, man.